I am mining investor and editor of Resource Stock Digest. We're going to call myself Gerardo Del Real this week, here with my partner, Mr. Nick Hodge, who is also an investor and the publisher of Daily Profit Cycle. This is, holy smokes, Nick, this is the 247th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk about This Country for Old Men and Mr. Jamie Dimon. We're most definitely going to talk gold, precious metals, the energy breakdown, and we, of course, are going to get into the crypto breakout with none other than our in-house expert, who, by the way, has guided our company portfolio to a nice little profit and rising quickly. But we have our in-house crypto expert, Mr. Chris Curl, who will be joining us later in the podcast. Mr. Hodge, first and foremost, I'm looking forward to seeing you by the time this gets out to the audience. You would have joined me in the 40 Club, I believe, as you are having a birthday. Is that accurate? Are you joining me yet?
Oh yeah, thanks for the reminder, Gerardo. We'll be in Vegas with the rest of the team, the Resource Stock Digest and Digest Publishing team, and it coincides with my birthday. So yeah, it'll be fun. It'll be good to see everybody. We do the remote thing, so we've got people spread out all over the country, and we're flying them all in. So looking forward to seeing you and everybody else as well. And looking forward to talking to Chris here in a bit about the crypto market and its a resurgence. So let's get into it.
No, let's get right into it. Let's start with the overall indices. We've had, we're recording this early because we are going to be traveling to Vegas. If any of you happen to be out in Vegas and see us, stop by, say hello, buy us a drink, tell us funny things, tell us not funny things, whatever. We're always game. So say hello. But listen, the overall markets, the Dow's down, and the S&P, frankly, for a third straight day. Economic data came in here recently that was womp womp, but the dollar index is firming up. It's back above 104. Let's start with the overall markets, and then we can lead into the dollar index, gold, silver, copper, and oil. And those last four obviously all tie in to the global economy. Thoughts, Mr. Hodge?
Remind me what those last four are after I give you my initial rant on the broader markets. So overall, still a bear market, right? But it's interesting because we've had another rally, which I would classify as a bear market rally. We've talked about these a lot over the past 2 years, right? Because the market's really been in a bear market since, honestly, literally the first trading day of 2022 was when the S&P peaked. So for context, it's still down from there. We haven't got back to new all-time highs, and we remain down 5%. We've had some good runs. For this calendar year, the S&P is up, but for the overall cycle, it remains down. So that's some context. The themes of the year that developed sort of remain true. You got this concentration at the top end, the market cap spectrum with what was the Magnificent Seven, it driving the market, now becoming the Magnificent Five. And so with companies like Meta starting to go the other way, sort of running out of gas. And so meanwhile, Apple is hitting new highs, so continuing to drive that overall S&P higher. I just said that one or two of those seven stocks has broken down a little bit. So I equate it to a game of musical chairs, right? It seems like those chairs are being taken away. And it seems like while everything is okay in the surface and you had a good November for stocks, it reminds me of July when we were talking about this with a pullback in rates and a ascension of the market, but not really a change in the overall trend, just a head fake. And I would say that beneath the surface, things continue to deteriorate and things continue to echo some of the things we saw in 2007. I got some notes because I had to do another interview this morning. So I was taking notes.
You're a popular guy, Nick.
Yeah, consumer bankruptcies back to 19% growth year over year in Q3, which is the highest level since the GFC. And we continue to get those downward revisions in jobs. The ADP number that was out early last week, by the time you see this, was a miss. We won't get to see the non-farm payrolls, but those have been sort of, as we've talked about, revised down every month so far this year. And so anyway, the stock market had a good run in November, but it's not back to all-time highs. It's only driven by a handful of small tech stocks. And gains are gains, to be clear. A 20% year-to-date return is almost a full year return here as we get to the end of December is nothing to sneeze at, right? Considering that an average return on the S&P is something like 7 to 9%. But you have to remember that nobody, bought this S&P on the 1st of January, right? People are in the cycle. And so for the cycle, they're still down. And if you think people saw it coming, that we were going to have this concentration in the top end of the market cap spectrum, well, that's nonsense too, because if you look at the returns from hedge funds, which I was doing earlier this week, long-only hedge funds are only up like 2 to 3% for the year. So
Yep.
They didn't see that move either. So anyway, some broad sentiment there on the broader indices, I guess.
All right, those last four were the gold, silver, copper, and oil, the energy trade, right? All tying into the global economy. Gold, less so. Silver still trading, somewhat like an industrial metal, though it did seem to have a mini breakout. And then copper and oil, of course, always, attached to the hip of the global economy. Let's start with the precious metals. Gold had itself what has to be described like as a mini flash instead of a crash, mini flash boom. It seemed like desperate short covering, right? It seemed like somebody was on the wrong side of a trade and it needed to get out at any price. Of course, the price spiked over 2,100. I knew the minute everyone on Twitter started celebrating that it was going to come right back down. And sure enough, it closed, I think, down for the day or up some $4. However, look, we're still sitting firmly above the 2000 level, 2026 level right now. That's with the dollar index surging above the 104 level again after testing the 102 level earlier these past 7 days. Thoughts on the precious metals trade?
I have a lot of thoughts, and other people have a lot of thoughts as well. I've seen a lot of narratives about the gold thing, people being offsides, short covering, inside information about weekend attacks in the Middle East, all sorts of stuff, right? So at the end of the day, gold's been in a bull market, and we've been saying that. We were saying that it needed a monthly close in November above 2,000, and we certainly got that. And it's been driven by different things. So I guess it's important to talk about that. First, it was sort of geopolitics with the wars in Russia and Ukraine, and more recently with Israel and Hamas. And then we've had the ongoing narrative of a pivot coming, which is what sort of took it to this record price this month, right? There was sort of some stumbling of economic data in November, jobs data, ongoing negative manufacturing ISM data. And the narrative is that bad news is good news because the Fed is going to cut sooner than later. So that's good for gold, right? Because interest rates are going to go down. And then what I think you're going to see is, the Fed meets this week when this podcast comes out, and you're going to see that the pivot is not going to be sooner than later. I don't think you're going to get much dovish language at all. Inflation is still high. And so I think the next catalyst for gold is bad news being bad news, right?
Yeah.
The return to contraction of economic growth. Remember, we had 5% growth of GDP in Q3. That's going to go down closer to 0 for Q4. And I told you that you're going to start seeing more recession talk return as we get closer to the new year. So I think that's the cascading of the catalysts for gold. And it's good because we don't want really geopolitics to be what's building that ascension of the gold price. We want it to be more fundamentals and technically driven. And so you still have all this other stuff on the side too, right? You still have the government debt and the issues with the banks and the commercial real estate and all that. So lots of catalysts ahead for gold. It remains in a bull market. What else did I want to say about gold? Anything? I don't know if you want to talk about gold stocks yet, but even silver starting to get bullish.
Yep.
The PGM group, platinum, for example. So you got a precious metals bull market, and the equities have a lot of catching up to do on the other two things. I'm including silver on that precious metals side, by the way. And then for copper and oil, oil's broken down. We narrated that as well. You got it down towards $70 now. So you had it run this year. It was a bull market, and then it caused a recession, which typically happens. And I told you might happen. As high oil prices are one of those major inputs for consumer spending and consumer costs that eat away at their budget. And then they cause a recession, and then now the oil price is telling you that. Copper's sort of telling you that as well. It had a little fake run in November, I would say, sort of like it was a bear market rally in stocks with interest rates going down a little bit, but you'll notice, and I'm sure you did, that it just doesn't want to go above $4, right?
Correct.
So
Not yet.
um,
Not
you've
yet.
got those commodities still pricing in economic slowdown, and to some degree, you've got the downside, and to some degree, you've got precious metals pricing in economic slowdown to the upside. So I think that's the answer to what you're asking about. What are your thoughts on those four
No,
things?
no, I think you articulated it perfectly, and we'd be, off and wrong if we didn't touch on uranium, which is still, I think, building a beautiful base here around the $80 level. I had the pleasure of chatting with and interviewing Mr. Amir Adnani, who, in the Junior Resource Monthly portfolio, we're up some 400% on that position. And, we did that again by preaching what I said last week, being there early, buying UEC when I had trolls on Twitter telling me it was mismanaged and Amir paid himself too much and the executives were too accomplished to run a junior mining company, and all the stuff that trolls like to say, specifically about, certain companies and certain management teams. And all Amir and his team have done is delivered beautiful gains for subscribers and myself. It looks good. We're holding that in the portfolio, not going anywhere anytime soon. And I suspect by the time I exit that position in the portfolio, it will be another quadruple digit winner, achieved the exact same way they've all been achieved. Get there early, buy what nobody wants it, get a trend that's your friend, and be wrong for a little bit, right? We were wrong by being early, and then we waited, and then we got the first leg up and shot up some 200%, and then it consolidated 50%, and we waited a year, and now we're up 400%. So I'll take 400% gains over, a multi-year period any day of the week. Anyhow, I say all that to say that when I spoke with Amir, he made, a really, really good point about the fact that there's going to be a 55 million pound deficit going into 2024. And so demand this year will be close to 200 million pounds. Supply from mining will be at 145 million pounds. And we're seeing more and more governments around the world commit to nuclear. And that deficit doesn't include any new demand coming onto the picture. So if you're looking for a trend being your friend, folks, uranium, you could do worse than being friends with the uranium trade. And I think that's one that everybody by now, if you've been following Nick and myself, should be well positioned in. And if not, it's definitely not too late to get in there. Those are my thoughts on uranium. I'd love to hear yours.
I mean, we talked last week about how it's not just technically sound, but fundamentally sound. And yeah, you've got the spot price marching up into the 80s now. You've got deals getting done with companies that have turned on production. We mentioned last week Encore Energy turning on production in South Texas. And this week, Boss Energy comes in and buys a piece of Encore's production in South Texas. So you've got deals happening indicative of maturation of this bull market. We said we were in the third or the fourth inning. I sort of anticipated gold getting a bit overbought. I told you that I had sold a tiny bit of gold and then bought a little bit more uranium ETFs in the last episode, and that was the right move as well. As you mentioned, gold bounced down after hitting record highs. The uranium stocks have now ticked higher, and it's just creeping more to the mainstream. Like Time had an article this week. The headline was something to the effect of, nuclear is the only option. In fact, I think that's what it was. Nuclear is the only option. So you're seeing it embraced by mainstream magazines, and I think that's going to continue. You mentioned Amir and UEC and a materializing 55 million pound deficit without the addition of new sources of demand. And they had an announcement in the past couple of weeks partnering with TerraPower, I believe it is, which is a Bill Gates like small modular reactor company, which is one of those potential sources of new demand in the uranium space. And so, like I said last week, you're in the middle of something that you anticipated for over a decade, right? Since Fukushima in 2011, and now all around you, you're seeing announcements that are pointing to that, right? Consolidation, M&A. More adoption of nuclear, more acceptance of nuclear. And I think you're going to continue to see that play out and overshoot, right? That's the next thing, right? Getting back to technicals is we're above that $73 mark on the spot. And as happens in uranium, there's a lot of blue sky now in the chart. So it's going to be interesting to watch.
Like, hey, I hate to bring down the mood, but, we're headed to Vegas tomorrow, and then, we're going to be staying about a block or two away, or at least driving right by UNLV. There's reports of an active shooter right now. I know this is a daily thing in America. I quit bringing it up because it's clear that politically there's zero will to do anything about it. I mean, everybody talks about doing something about it, but in America, folks, if you're from elsewhere, there is zero will to even, implement laws for responsible gun ownership, let alone, regulating some of the gun laws. And this is coming from a very pro Second Amendment person, as I've said on this podcast before. So anyway, I hate to see that. I hope that works out. The point that I wanted to make with the active shooter situation is if we're not going to do anything on the gun side, can we do something on the mental health side? Can we agree that we're not going to stop all the shootings, but there are some, indicators, just like, we know that domestic violence abusers that have a history of domestic violence tend to be a lot more likely to murder and kill, especially loved ones and spouses and girlfriends, right? And oftentimes, a gun is the way that happens. And oftentimes with domestic violence cases, they end up being misdemeanors. So there is no felony on the record for these people. Even if, the misdemeanor was an assault, oftentimes they plead down and now they could just run around and decide whenever they want to shoot their girlfriend or their wife that the gun's there and that's what they're going to do today. Or they can go into a university where kids are supposed to be learning and just start shooting shit up for whatever reason this person is going to have. And so, maybe that's the pivot, Nick. Maybe we start talking about mental health in a more, and you've brought it up before, but in a more pronounced fashion, because that's the only way that I see we're even going to get to start addressing some of the ills that motivate people to take such extreme actions on just random people, right?
Yeah, no appetite on the legislative side for sure, and on the sort of Justice Department side or federal side is a focus, I would say, or a misaligned focus. I did see the UNLV thing right before we hopped on, but while you're talking, I was thinking more about a shooting that occurred. I don't know how recently, it was this year or last year, but it was an elementary school teacher, and it was like a kindergartner who had brought a gun to school and fired and shot her. And she lived, but the mom was charged, right, and rightly so, for child neglect, not improper storage of the firearm, etc., at the state level. But she was in a state where marijuana was legal, and I guess she was also a marijuana user. And the feds came in over the top, and it put on some, what in legal terms I would deem as draconian charges of intermingling cannabis use with firearm ownership, which. I would bet if you looked at the list of mass shootings, many more had to do with mental health than with cannabis use.
Yeah, again, but worry not, folks. Yesterday, The Rock confirmed in an interview, Dwayne Johnson, the former pro wrestler, the actor, confirmed that he, has been asked by our elected officials to run for president. And just today, he was briefed by the leaders of the military industrial complex, the Defense Department at the Pentagon. He was privy to a briefing there. So if you want to know how fucked up America is, still the greatest thing going. Still very fucked up. Both things can be true at the same time, folks. That's how fucked up America is right now. We got The Rock running for president in 2024, or Biden, or Trump. There's active shooters everywhere. There's no appetite for gun legislation, and we want to get moms in trouble to smoke weed when their kids end up getting access to one of their weapons.
Maybe Arnold can be his VP running mate. He's getting his face back out there with a Netflix special and a new biography that's out. So, the reality show continues, literally.
Yeah. And then, listen, let's pivot away from the negative stuff. I'm a big documentary geek. I watched one on, I believe it's Amazon Prime, on what I believe to be the greatest running back in the history of football, who retired way too early, Barry Sanders. And it is a phenomenal documentary. I mean, I grew up watching Barry Sanders. Of course, I grew up in Chicago, right? But he was a Detroit guy. And even if you were a Chicago guy, you had to take pride in the fact that the guy was in the Midwest and just doing things that, frankly, I haven't seen before and I haven't seen after from a running back in the field. I mean, he would make his own defenders run into him because he was just like a Nintendo game on steroids, right? It was something else. And to see the guy be such a humble class act in the documentary, good role model. Hopefully you don't know skeletons in the closet like we all have, but everything that I saw in that documentary put a smile on my face, and it was a great reminder of what a bad man he was on the field.
I haven't seen the documentary, but I am old enough to remember watching him play for sure.
Yes, sir. Well, listen, we have to talk crypto. We have been pounding the table the past year, trying to call bottoms, trying to find bottoms. Look, we, as usual, try to put our money where our mouth is, and took 50,000 of our company money and gave it to our in-house expert, Mr. Chris Curl, and said, allocate this as you will. You put it wherever you want. You have complete autonomy. You're the expert, not us. And so you take your time or do it all at once. You do it however you want to do it. But here's $50,000. Make it grow, and make it grow is exactly what Mr. Curl has done. Bitcoin is surging. It's at 44,000 as we speak. I'm really looking forward to having him on here shortly, because I would love to get his take on some of the other opportunities out in the space, if the entire space is, seeing gains, or if it's just isolated to Bitcoin. Of course, me knowing nothing on the crypto side, I'm eager to have him on. So is Mr. Curl with us?
He's ready to join, yeah, and I'm glad that he can talk about it directly instead of me having to speak piecemeal and for him. So yeah, have at it. And I like that, you're not necessarily plugged in or tuned into, and certainly not well versed in buying cryptos, because you can ask some questions that likely a lot of people have. So yeah, here we go. Have at it. Ask him whatever you want. And here he comes.
Let's do it. Drum roll. And there he is. Chris,
hey
how
guys,
are you today?
how are you doing?
We are well. We're excited to see you in Vegas tomorrow. Looking forward to catching up in person. And look,
That's right.
Looking forward to saying thank you. You have our crypto portfolio, looking really good right now, looking really healthy. And it seems to me, I'm an amateur in the crypto space, right? But I can read a chart a little bit, and it seems to me like it's just getting going. Your take on the overall crypto space, and then let's talk Bitcoin specifically. And I'm sure Nick and I are going to have some questions for you.
Sure. Yeah. So this goes back all the way in February. I was predicting that Bitcoin would be back to $50,000 by the end of 2023. I think a lot of people were kind of rolling their eyes at me at the time that I was saying that. But yeah,
they
there
always
are a lot.
do when things are down, Chris. Trust me.
Well, right. People are just very short-term and emotional. That's why I'm here, to let people know what to do for the long term. But yeah, we are in a bull market. The last time I was on the show 6 months ago, we were not in a bull market, but I was highlighting why that at that moment, we were in a very good position to, if anyone was watching that, I was basically telling everyone to start buying Bitcoin, start buying cryptos, because, the next 6 months were going to be very good for Bitcoin and crypto as a whole. And we're seeing that play out. Back in the beginning of September, I highlighted what I called my Bitcoin bull market trifecta in one of my issues. And that trifecta is essentially the fact that we have the Bitcoin halving coming up, which you guys have heard me talk about plenty. I think every time I come on, I talk about it.
You talk about the halving, I talk about Patriot.
Right. I talk about Bitcoin halving, you talk about Patriot battery metals. But hey, we're all here to make money, right?
Absolutely. You got to talk about the butter that's buttering your bread. So that it is what it is.
Right. So, but it's still coming. It's going to happen in April or May of 2024. And that's always a very bullish catalyst, because the issuance of Bitcoin is cut in half. And that triggers, every time that happens, it triggers a massive run up in the price of Bitcoin. And we also have this spot Bitcoin ETF approval looming. There have been a number of spot Bitcoin ETFs applied for in the US that have been, either delayed or rejected. But this summer, BlackRock filed for their spot Bitcoin ETF, which was incredibly bullish at the time. I was writing articles telling everybody, hey, now's the time to get in, this summer, like now's the time to get in before the institutions do, because once this thing gets approved, which it will, because it's BlackRock, and they have a 575 to 1 approval record for ETFs.
It's almost like they have some really good lobbyists behind them, right? It's like
right.
it's almost like former BlackRock people infiltrated the government, put themselves in positions to oversee the commissions and regulators, and now get to approve the people they go have margaritas and old fashions with. But that would
I
never
think you've
happen,
described
right?
almost all of our regulatory bodies, Gerardo. But yeah,
And our political bodies as well. Yes, sir.
so I mean that's happening. Their deadline is in March of 2024. Now, ARK Invest has a spot Bitcoin ETF that a lot of people are speculating is going to be approved in the beginning of January, by January 10th. I'm still skeptical on that one, but the market is definitely anticipating that spot ETF for ARK being approved in the beginning of January. That's partially why we're seeing a big run up right now for Bitcoin, with it hitting $44,000. So maybe that'll get approved, maybe not. But I know for almost certain that the BlackRock one in March will get approved. So regardless, I mean, buying now is still wise because we are basically in the early innings of a new Bitcoin bull market, and we're going to see, a lot of gains, especially in select altcoins. But of course, the third big catalyst is an ultimate Fed pivot, where we're going to see the Federal Reserve having to cut interest rates and adopt a more, kind of ease their economic policy, because I just don't think it's viable for them to keep interest rates high given the amount of debt loads they have to service. And you guys probably know more than I do about this, but I believe that over the last year, there was something like $1 trillion spent just to service the current debt levels that the federal government is managing, which exceeds our entire defense budget, which is already massive, to say the least. So at these interest rates, I mean, I think at a certain point, they're just going to have to cut. They're continuing to pause. And at this point, it's just a question of when. I've been speculating for the last several months that it'll be sometime around the middle of 2024, which lines up pretty perfectly with the other catalysts for the bull market trifecta, with the Bitcoin halving and the spot ETF approval. So really, for months, I've been saying 2024 and 2025 is going to be super bullish. If we get this approval in January and all this money floods in, it's possible that we'll see a new all-time high by the Bitcoin halving event in April, May, and this cycle might peak out towards the end of 2024. But that's just something, I'm keeping a close eye on.
Okay, a couple of things there. My first question would be, do you believe that the quote-unquote smart money, which, it's the people with the Bloomberg terminals and the people behind the scenes that have access to the regulators, do you think they're front-running this potential, ETF approval on the BlackRock side of it?
I do.
Because it's big money coming in. It's not small retail money that's driving Bitcoin, at least.
Yeah, so it's interesting to note that there hasn't been a ton of new retail money in yet. And of course, I don't know how much that's a function of the fact that the average consumer is kind of tapped out. Although when I go out and about, it doesn't seem like they're tapped out. But a lot of the data shows otherwise. I don't know if everybody's just running up their credit cards. But yeah, I do think that there's institutional money front running this, and it could easily turn into a buy the rumor, sell the news if this ARK ETF gets rejected in January. I predict a pretty large downturn in the crypto markets. If you're on the sidelines, and we get that downturn, I would be buying heavily in Bitcoin and cryptocurrencies if that happens.
Interesting. You mentioned the other coins, and my question is Bitcoin obviously is, for lack of a better word, the star player, right, on the team, for good reason. It's the most stable coin. It's the most liquid. But what opportunities, and obviously don't give away the farm because that's not fair to your paying subscribers of your service, to which we'll put a link if you're so inclined to dabble in the crypto space. Chris is a phenomenal source for it. That's why he's on here. But where are the other opportunities? Are there opportunities that maybe are higher risk, but also higher reward in the space?
Yeah, there are so many opportunities in the cryptocurrency markets. I think 6 months ago when I was on, I was talking about all the alternative layer ones like Solana and Avalanche. Those are massively up since then, and I think they still have a lot of room to grow. And then, I've been writing about crypto gaming. I think that's going to be huge in this upcoming bull market. We're already up well over 100% on most of my picks there that I've bought for the portfolio, and that's just getting started. And I do think that select artificial intelligence crypto projects are going to do well, as even though they kind of had their own little bull market in February and then retraced a bit. I think there's still a lot of growth potential there, and still a lot on. You don't even have to leave Bitcoin because we have entire protocols built on top of it. With the ordinals, Bitcoin ordinals, which are inscriptions on the base layer of Bitcoin that can contain anything from an image to an entirely new token standard, the BRC20 standard, where people are issuing meme coins and other things and inscribing them onto the Bitcoin base layer. So I've also shown my readers kind of how to mint and buy those tokens and those NFTs if they want to. I think if you're kind of a Bitcoin maximalist and you don't even want to buy any of these other projects, you can like Nick, if Nick feels like he wants to be speculative, he can, get some ordinals or you don't have to leave the Bitcoin ecosystem. And the interesting thing is when all this ordinal transaction increases, it also massively increases the fees and the mining rewards on the Bitcoin network. So it's long-term bullish for Bitcoin, even though a lot of people kind of see it as like pollution on the Bitcoin network. I'm open-minded. I think crypto is decentralized and people should be free to kind of do what they want to do with it.
Well, that puts you directly and then square on the opposite side of Mr. Jamie Dimon. I joked about No Country for Old Men, and Jamie Dimon was on TV ranting and raving about how if he was in charge of the government, he would outlaw crypto and Bitcoin immediately, said he would eliminate it. Any thoughts on Mr. Dimon's take on the crypto space and why he feels so passionately about crypto and Bitcoin? It seemed odd. It seemed out of character for him.
Well, I mean, I think it's a direct threat to his whole business model. It is. Bitcoin is anti-central bank, anti-banking. It's be your own bank. That's the motto. So where does JP Morgan fit into that? Where does Jamie Dimon fit into that? Yeah. They're obviously not going to like that. They're going to feel threatened by it. And he's probably going to hold out as long as he can. But the reality is this all kind of ties in. I know to what you guys talk about a lot with the fourth turning and the fact that Bitcoin is in many ways a monetary debasement hedge and kind of increasingly the preferred hedge for younger generations, digitally native generations like the millennials and the zennials, who are a lot more comfortable doing things on their phone than, say, going to the gold dealer and buying a gold bar or a gold coin and storing it in a safe. So it is, I do see Bitcoin as being the anti-establishment, anti-institutional position during the fourth turning, during these periods of uncertainty. And of course, someone like Jamie Dimon, who is totally enmeshed, it really is the institution,
Sure,
is not going to be really happy about that.
Interesting. Nick, any questions on your end?
I guess I want to talk about hodlers, right? Which I view myself as, and where they fit into the market, both the existing market, right, with there not being a lot of turnover in the Bitcoin float, right? Because there's a capped amount of Bitcoins that are ever going to be mined and put onto the market. And I know that there's other people like me who own them on a physical device in a safe where, I have no intention of selling, right? So those are sort of off the market.
Next
so
to
that's
the bullets, everyone, I like to remind everybody the
That's
safe
right.
that's also stacked with just making sure y'all don't
So
get any bright
that's
ideas
one
in there.
aspect of it. Like, how does that playing into the current price rise in Ascension? And then also, I guess, how or why people should hold, right? Because one of the things, I guess, frankly, pushback I see is about the complexity of the crypto sphere, if you will, about, all the different coins and exchanges and wallets and how to do it. But for me, it's pretty simple. Like, I just own Bitcoin, and it's on a physical device, and it's in my safe. So it's only as complex as you make it. So can you talk about like those two aspects of holding?
Well, sure. Yeah, and you don't have to buy all these, speculative coins. You can just buy Bitcoin. I was telling my readers to dollar cost average into Bitcoin when it was under $20,000 the whole time. And you can just accumulate Bitcoin and then sell it near the the cycle top, because Bitcoin is a very cyclical asset. And it's all related to the halving. I think the volatility will decrease in time as kind of the adoption curve grows for cryptocurrencies and Bitcoin. But there's a lot of upside potential because, as you said, there's a limited supply that can ever be mined. That's 21 million, the vast majority of which have already been mined. And the difficulty in mining increases exponentially, which is why, you used to be able to mine Bitcoins at home on your PC. Now you're seeing massive companies sprout up with these huge data arrays that have GPUs that are just, constantly doing the computational work of mining these Bitcoin. But in this cycle, we're seeing that the people who own and hold Bitcoin are holding it for the long term. Over 70% of Bitcoin supply hasn't moved in over a year, and more than 41% hasn't moved in over 3 years.
Good.
So people like you, Nick, and I, who are smart and kind of see the writing on the wall here, we're continuing to accumulate, and we know what's ahead for Bitcoin in the long term, especially in the face of the kind of monetary debasement that we're living under globally. So that's only going to continue as kind of the smart investors realize, hey, even if I don't understand all this crypto stuff, I know what they're doing to fiat currencies. So let me get some of this Bitcoin. Having gold is a good idea, but probably going to see more upside on Bitcoin over the long term. I mean, I think in the 2030s, we're going to probably see Bitcoin trading between $700,000 to $1 million. So buying it now at 40 something thousand, holding long term, not a bad strategy.
Well, I think about if there was a hot junior mining stock that only had 21 million shares out and the entire world knew about it, what the price would go to, right? So, and then I guess my last question would be about companies. You mentioned companies now mining Bitcoin. That's been a thing for a while on various scales. But you can invest in companies as well to reflect that sort of bullish theme or sentiment on crypto, right? You could buy a company like MicroStrategy that holds Bitcoin on their balance sheet, or you could buy a company that mines and sells Bitcoin and holds a little bit on their balance sheet. Or you could buy some tangentially related company, or, there are ETFs. We talk about a spot ETF being approved, but there's like the BITO, for example, you can buy to get long Bitcoin. And so I guess just remind people or talk about that as well, how you can, get exposure to the market without having to actually, buy a coin itself.
Sure.
Let me say one thing really quick, Chris, before you provide that, I'm sure, insightful answer. If you want more of Chris's insights, along with Mr. Hodge, myself, and our talented group of editors, I'm supposed to remind you to go to dailyprofitcycle.com/subscribe, where you can get tons of free research and insight from yours truly, Mr. Curl, Mr. Hodge, Ryan Stansel, the Jug Carl, and a group of others. So with that being said, the floor is yours, Mr. Chris.
It's true. There are a lot of good free articles on there. But yeah, as far as, you don't have to open up an account on a crypto exchange if you don't want to. There are many stocks you can buy. Coinbase has been a great stock this year. It's going to continue to go up. MicroStrategy, which holds tons of Bitcoin, is a good way to have exposure to Bitcoin without buying the coin, as are a myriad of Bitcoin miners that are publicly traded. These Bitcoin miners really kind of perform like a leveraged Bitcoin position. So if Bitcoin's going up, you're going to see many of these Bitcoin miners with valuations and gains that exceed that of Bitcoin. So yeah, there are many. And of course, we have futures ETFs, which aren't as good. And I think within a few months, we're going to have a spot Bitcoin ETF that you will be able to purchase. So yeah, a lot of options out there.
And then it'll be really easy to put a Bitcoin in an IRA as well, which I think is an interesting proposition.
So many older people with retirement funds that are skeptical, hesitant to get in now, are going to be allocating a certain portion of their portfolio to Bitcoin once this spot ETF is approved. It's going to be huge. And of course, the way that these spot ETFs function is that the issuers have to buy and hold all these assets on their balance sheets. So BlackRock, Fidelity, ARK, all these, huge asset managers are going to have to actually buy this Bitcoin and hold it. And that's just going to be bullish for the price. There's no way around it.
Good. Well, I'm glad we launched the $1 Million Crypto Club. That's been going well. As you and I were talking about this week, Chris, the portfolio is now up. The goal is turning that into $1 million in 2 years. And of course, at least from my perspective, earlier you get trend better. So we'll provide a link to that $1 Million Crypto Club information as well. And we thank you for joining us today. So sorry for cutting in there and wrapping it up, but I think we were getting to the end there.
No, that's great. I think I said everything I needed to say, and now's the time to get in.
Good.
Chris, one last one before you take off. I always talk about bull markets and where they're at, and I use baseball analogies, right? So, if I say the uranium bull market is probably in the bottom of the third inning, where would you peg the Bitcoin and the crypto bull market that we're in right now?
Bottom of second inning, probably.
Nice. All right. That means there's a lot of runway, folks.
Yeah.
Good stuff. Good stuff. Chris, this has been awesome as always. Thank you, sir. See you in Vegas.
Thank you. See you guys.
See you.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.